Hey, good morning, everybody. Just coming on 6 a.m. over here. It is Tuesday, September 5. Reminder here, financialjuice.com, very, very light, important economic data due out today. And over here, you have strike. You will love this. If you are trading from a PC or a laptop, you will absolutely love it. Allow you to listen to the market rather than having to watch every 1 minute candle. You can get a couple of things done. So here we go. 2 Fridays in a row, green, 10 gap ups in a row since that low that we put over there on August 18th, even though we did gap down less than a point over here on Tuesday before the big algo day, 10 gap ups in a row. Made it all the way up to where we were looking for. And again, on the other side of the coin to that, full moon. Full moon was there on Wednesday of last week. 1, 2. Today would be day number 3. The highs that we have so far are 45, 41. We expected that we were going to be bouncing up into the full moon. That's exactly what we got. A little bit higher than we expected, but here we are. So on today, looking at the bounce retracements over on SPX, this 44.92.65 would be your first retracement. This would also be your low of the day from August 30th, the day of the full moon, 492, 44.92.65, 44.93.59. At the same time, it would basically bring you right to where the current, as of today, 5-day moving average is. So, or sorry, as of Friday's 5-day moving average. That 5-day moving average will be fractionally higher. And here you have your 23.6 retracement, where you see right there, taking you from there down to those lows. So just a dip below 4,500, which we've only seen back over here on August 30th. August 30th being your low of 44.93.59. That's all that we should be expecting and looking for and hoping for in a day like today. Nothing spectacular, nothing to go out there and start jumping up and down and screaming, here we go, here we go, here we go. Take it slow. On the QQQ, the September dip, what we're looking at on retracements are, again, 374.67 would be the primary. Almost got that pre-market. Show you in a second. And then we'd be looking for that 370.85 and the big 368. So as of right now, again, had a little bit of a move, nothing to be excited about, nothing to go jumping around about, because I have a very big warning for you. Let me just copy this so I have it for today. And there we go. The plus or minus 1%. And yeah, everything's pretty much the same as Friday because we just closed fractionally lower, 40%. So here we go. Charts. SPX. As you see, big algo day here on Tuesday, and then we have gone sideways for 3 days in a row, as we do typically going into a weekend, a long weekend, 3-day weekend. We are at the April of 2022 highs, April 21, 2022. The September 2021 highs, same thing right there at 45, 45, 85. I like that. I like it a lot. We do have that gap that's up above, and we need to have a little bit of respect for that today. Down below, again, 45.05, big spot. Any kind of breakdown below that, we're looking at 44.93. So again, we're talking about a very, very tight, small range, very understandable for what we're working with right now. Here's our problem. Our problem is the VIX. This red marking that I have over here is Friday, where I was displaying for you the very long tradition that we've got going on now for a couple of months, where on Fridays they crush the VIX. They drop the VIX on Fridays. From the weekend here onto Monday, even though the markets were closed, futures and the VIX are still open, gap up. We had another gap up here overnight. These gaps very much need to be respected, as it will allow, should it be taken, for the S&P to move upwards, where we already know we have those gaps up there above 45.45 that go all the way to 45.77. And today, bringing you back again, is day 3 after the full moon. So we are still inside that full moon window, and I'm the only one that I know of that actually tracks this thing, but it's accurate as hell. So we are still very much in that full moon window, where I will put you in here, your full moons, and throw you out to where we are. And there we are. There is our full moon as of right now. That's what we're looking at. And here's your full moons going back only a year. April, really tough. May, again, really tough. June was another one that was really tough. And then July, that was pretty much, you could see that. And here we were, 4607, hit perfectly. Want to go out further? Let's go. Here's our 3-year daily, and you can go back and you will see your full moons have a very, very strong correlation with where your tops and where your bottoms wind up getting placed. Right now, we look very, very much like August into the September full moon, which was our CPI day, and downwards into that October low. I'm not calling for a rug pull, but you have every single bit of evidence all laid out on the table to say OJ did do it. So we'll see how good all the Kardashian team of lawyers are as to whether or not we're not going to do it and be heading down to 44, 43, and eventually making our ways down into the 4200s during the month of September. VIX, a little bit of a concern, but again, down here at 13, I can't see how they crush it lower. And you got a huge week coming next week. QQQ, again, looking at this as a ABC possibility, having moved 7.36% to the upside off of the bounce, off of that major low. Here's your big Tuesday algorithm day, and perfect spot right here, 375.27. But this low right over here from August 30th, just below 373.50, is where the first honest test will be taking place. So for me, 373.50 is as far down as I would be looking for during the course of this week, while having a lot of respect for this 378.50 and knowing that 380, 381, all the way up to 383 is a gap that is unfilled. I cannot even put together in a National Enquirer a headline that would make you want to go and move up here. So I bring it to the dollar. The dollar's just made contact just now this morning with this 104.636 pivot. What does it mean? What does it mean? Well, here's what it means. We are right up here to the May highs, May 31. It's right when we came up to that 104.636. Zoom you out a little bit more and you see it again. This was March, where March the market was selling down. Everything is saying sell down, but the market's not moving right now. And we've got our FOMC meeting coming up in 2 weeks. And a much wider view, and you can see where this 104.636 is. We had sold down quite significantly off of that major move that we bottomed in right over here at the end of September last year. And this move, although it is pretty strong, is starting to look as if it is trying to make a breakout. Load, study set, big charts. And here we are just from a chart perspective point of view. We do have a little bit of a buy divergence is taking place over here on the 6 hour. And we look over on the daily, and we can see the daily has an extreme buy divergence that's sitting on it. So not using the dollar as a strong indicator, but it's definitely there for a warning sign on both sides. Breaking above 104.636 is not good for stocks. The fact that it has a sell divergence on the daily and the wider time frames is not good for the dollar to keep on rising. However, it is above the 400-day moving average. 250, 125, and 10. Nothing at this point in time is bearish about it, and we are on the cusp of breaking out over here on the dollar. So keep your coins to your trading in your short term. Don't be overexposing yourself in the short term of what we're looking at. 1 day, 2 days, middle to the end of the week, we'll get a confirmation as to whether or not we do have the right projection that we're looking at as we head into big week next week with OPEX and into the end of the month where the next full moon is. And it all still says the same thing. It all still says that we are looking at what we are here, and we are going to retest that low and be looking for somewhere down here around this 42.85. That's what it looks like for now. We'll see how it works out as the week progresses. See you guys in the chat room. Welcome back. I know it was rough having a day off, but again, no overcommitting. Talk to you soon.